Hello, I'm Natalie Kenway, Deputy Editor of Investment Week. And in the second part of this video series, I'm talking to Chris Cummings, Chief Executive of the Investment Association, on the findings of the Asset Management Survey. We're talking a bit about positioning and regulation. Hi Chris, thanks for coming in. So IA members have said that they've increased their investment into infrastructure quite dramatically. Why do you think that is, and what are the benefits?
Well, the benefits of investing in infrastructure fall into two main areas. We've seen an increase of some 40 billion in infrastructure investment in this year's asset management report. Okay. The report shows that we're now an industry looking after some £7.7 trillion worth of client assets. And a small but interesting and growing part of those assets is going into infrastructure. 75% of that investment goes into infrastructure to do with transport, energy and so on. Those are things that provide a long-term earning stream for investors. But 25% go into areas such as social housing. Now, those are really interesting investments because they demonstrate to policymakers that here is an industry that's actually able to help finance the UK, as well as providing for investors good long-term earnings, good long-term potential. What we need from government, of course, is predictability of the business environment to make sure there are no tax changes or changes to policy that would undermine the long-term attractiveness of the UK as a place to continue to invest in infrastructure. So good so far, really exciting, some great innovation coming through, but actually that needs to be set against a framework where infrastructure investment continues to be attractive for UK investors and for asset managers looking for a good long-term return.
We've also seen an increased focus on SRI over the past few years. What are the main themes evolving within asset management?
So socially responsible investment, for me, goes to the heart of the investment process. Some organisations are looking at it as a new initiative, but actually an awful lot of the member firms I speak to keep telling me that actually this is just how they've always invested the money. But certainly it's an area that's attracting far more scrutiny and interest. And I think that's for the good, actually. For an industry of our scale, it's only natural that asset owners will be wanting us to be more thoughtful on these issues. There's also growing political attention, certainly after the Paris summit, to see how the asset management industry is meeting everything from climate goals through to better understanding its impact on the world. And we've just seen some new proposals from the European Commission on the SRI agenda as well. So here is an area where actually there's political oversight and much more regulatory attention. Okay. There's also a great deal of innovation going on though as well. So everything from Elizabeth Corley's group looking at social impact investing through to the work that the IA is leading on socially responsible investment. We established a new committee to oversee our work in this area. Okay. We had 38 member firms pretty quickly volunteer to join the group, which is, I think, the largest group we have at the IA now. Okay. So that demonstrates the level of interest in this subject. It's true it's coming from the industry, but also asset owners are asking asset managers to be more thoughtful about how assets get managed and to demonstrate that actually we do take these issues very seriously. And when I think about just what's happening here in the UK, as baby boomers die and leave their money eventually to the millennials, I think what we'll see is our industry has to be much more thoughtful and do a much better job in communicating to the millennial generation how we're going to look after their money. I think a publication I read recently said that 70% of millennials wanted their investments to follow their values. The only thing that surprised me with that was that the figure was as low as 70%, because I've certainly seen figures that are much higher. And when I talk to my children, it's the one thing that they always ask about: how are we investing our money? Okay. So I think there is a groundswell of opinion there. And it's right that our industry should lead the way. On the international stage, I actually think that the UK could become the home of SRI investment. And that's, in a post-Brexit world, perhaps a great marketing advantage for us and something that could separate the UK-based asset management industry out from its competitors.
Okay, yeah, that does sound great. What about the use of blockchain? In 2017, we saw the first use of a blockchain-based platform to purchase funds. Do you think this is a trend that will continue? And what are the benefits for asset managers and savers?
I think the asset management industry is poised on the edge of a technological revolution. It's certainly been true that many firms in the industry have been technological innovators. We've some 240 members at the IA, and looking across all of the membership, it's been clear to see who've embraced the digital agenda and which firms are looking for more help and assistance. That's one of the reasons why we launched our own fintech accelerator called Velocity earlier this year.
Yep.
And that came about because here in the UK we've some 2,500 fintech companies, all of whom specialise in capital markets, many of whom thought they had a great product for the asset management industry. And many people in the asset management industry said, not so much. So there was a bit of a gap between where the technology companies were and where the industry was. And the reason to launch Velocity was to bridge that gap.
Okay.
What we hear very clearly from the firms that we represent is they're less interested in tech for the sake of new tech, but very interested in technology that can help them solve business problems. And that's true whether it's at the front end, from robo-advice through front, middle and back office. And part of the challenge, I think, for the technology companies is to demonstrate that they really understand the industry. They're not trying to sell us second-hand products, but it's technology that can really make a difference. And certainly when I think about blockchain and distributed ledger technology, the opportunity that presents to the industry is significant. It really is significant. It's a great way to modernise middle and back office, but to see cost reductions, and those are reductions that can then be passed on through better investment performance, lower costs to improve the investor outcome. So I think this is a particularly exciting time in asset management as we embrace technology. There will be changes, but I think those will always present opportunities for open-minded and ambitious firms.
Okay, that does sound exciting. What about the use of artificial intelligence and big data? How do you see that shaping the industry?
Well, another of the exciting trends that the industry is now wrestling with is better use of artificial intelligence and big data, particularly during the investment process. The ability to gather data that at first sight could look unrelated to consumer behaviour or to investment performance, and actually find new ways to interpret that, to gather new insights, is really exciting, particularly for analysts and portfolio managers. So I know there's a lot of new initiatives springing up, but certainly from the IA's point of view, we want to make sure that we're able to support members, yes, when it comes to public policy and regulation, but we wouldn't be doing our job if we weren't helping them adapt to these new technologies throughout their businesses. And that's why we place so much emphasis on the operational work that we do. We've recently launched a new committee to oversee this work. It's proving to be hugely popular, but it also takes us into areas such as cyber security and cyber resilience, because wherever there is a upside, inevitably people will be looking at the downside as well. And certainly cyber is an area that we're encouraging all of our firms to be much more mindful of. The FCA, as our regulator, is being much more upfront about its desire to see firms take their cyber security issues much more seriously. And so, yes, we want to make sure that AI and big data is being used positively, but also recognising that there are some cybersecurity issues that we need to map out as well.
Moving on to regulation, it's obviously been a big disruptor for our industry, and the FCA has said it will take action about the unintended implications of MiFID II. Do you think we'll see some kind of revamp to the rules in 2019?
Well, having just got through the implementation of MiFID II, there aren't many organisations out there who would thank the IA if we were to campaign for a radical review of MiFID II. There are a few areas, though, that we all know we need to change. And here I'm thinking particularly about the PRIPS KID. It does seem to me a great failure that here we are as an industry, really focused on wanting to build a better and better reputation with our customers, where we're in the unfortunate position of having to hand over a disclosure document, which we know technically may have correct information in, but which is at the risk of misleading retail investors. So it's hugely important that the PRIPS kit is reviewed by a good combination of industry and regulator working together for the benefit of our consumers. And that absolutely it's not introduced into the UCITS regime as is currently proposed, because I think if that were to happen, then actually retail investors would be put in a very difficult position, and that would affect the industry's reputation negatively for years to come. So I think that's an important thing that we have to say when looking at MiFID. Now, I know the FCA has said that it's going to be supervising firms to make sure that they have implemented MiFID 2 correctly. We continue to help and support member firms get through MiFID 2, certainly the post-implementation aspects. But the wider canvas that we're painting on at the moment is, of course, the Brexit reality. The Chancellor made a commitment that the UK would cleave to the European regulation up until the point that one or the other side decided to diverge, and then they would diverge knowing that there would be implications for that. So that's why our work on Brexit continues apace. We continue to advise the regulator and to work with government here, but also to advise governments in other European member states about the importance of a Brexit that protects Europe's savers and investors. And that really has to be the number one priority. Then the industry can make sure that, yes, delegation is protected, that we have contract continuity, that we maintain a level of data equivalence, but all of those things have to be second order to making sure that Europe's savers and investors are not disadvantaged through the Brexit process.
Yeah, that is really important. Okay, well, thank you very much for coming in.
Thank you for having me.